Hello, my name's Emma Godwin. I work for a company called Solutions for Accounting. We're a Sage business partner who you may or may not have heard of. We're having great success in putting our product, Sage Intacct, into multi-academy trusts recently, and I'm here to talk to you about one of my specialisms, VAT in education. I qualified as a chartered accountant many years ago, and I've spent most of the last 20 years in an education setting of one form or another, working in FE, third sector, and latterly in the multi-academy trust sector as a CFO and also as the project accountant of a very large multi-academy trust where I facilitated the replacement of the finance system. We replaced it with Intacct, Sage's current flagship product, which is truly flexible and dynamic cloud-based product which assists multi-academy trusts to improve their reporting and their inputting, increasing efficiency and maximising staff usage of time. VAT has become a bit of a speciality of mine over the years, having worked in these various sectors, both Section 126 and partial exemption, which is where people tend to get a little bit confused and a little bit terrified of what may happen from HMRC. There's a lot of guidance out there, but sometimes finding it can be a bit difficult. Today, I'm just going to give you the benefit of my experience and what I've discovered and learned over the years doing VAT returns in these various different settings. Some of it might sound a little Byzantine in its complexity, and so I'm here to try and break it down and make it a little less intimidating for you. If you need any specific advice, I recommend that you speak to your accountants, your auditors, or potentially, if you need to speak to HMRC. That can be a little bit troublesome, I will grant you, but it is worth trying to get through to the right departments. Sometimes you will find that the charities department is more helpful than the regular VAT department. So, without further ado, let's crack on VAT in education. So, how did we get here? Back in the early noughties, schools started leaving the control of local authorities and setting up as businesses in their own right, either in the form of single academy trusts or latterly as multi-academy trusts. This gave them the advantage of being able to have their own strategy, do their own business, make their own buying decisions. However, what wasn't initially foreseen was the fact that it left them at a slight disadvantage in terms of VAT. The situation is that between 65 and 80% of your income will go straight out the door on your salaries and pension contributions. However, that remaining 35 to 20% needs to run all of your facilities, your capital programme, and the cost of running your day-to-day educational activities. Therefore, not being able to claim back the VAT on those supplies and services was putting multi-academy trusts or single academy trusts at a distinct disadvantage over those that were still within the local authority control. So, in April of 2011, a little bit of legislation was changed under Section 33B of the VAT Act 1984, if you're interested in such a thing, which gave multi-academy trusts and single academy trusts the ability to reclaim their VAT under Section 126. This is a special kind of exemption, which means that eligible bodies, basically meaning charities, can claim back the VAT on their activities that are related to what would usually otherwise be an exempt activity. Education was an exempt activity. However, with the introduction of this legislation, it slightly changed that definition to mean that it was considered a non-business activity. So, you may know about VAT from other sectors. If your turnover exceeds 85,000 currently, you must register for VAT. That turnover in a school setting might be related to lettings of your properties, or you do external events or consulting activities not related to education. If you're in that position where that turnover exceeds 85,000, you must still register for VAT. In most schools, that's not the case, and therefore there is no need to register for VAT. This leaves you in the peculiar position of being able to reclaim VAT and therefore needing VAT invoices, but not actually having a VAT registration number, which confuses the hell out of some suppliers. But please be assured that is the situation you're in. You are an eligible body, you are an exempt charity, You are able to claim your VAT back under Section 126, but you are not a VAT registered company. Determining your VAT position starts with understanding the differences between Section 126 and partial exemption. Under partial exemption, that is where you are a VAT registered entity. You may have a VAT group, including trading activities, another trading company within your trust group, or you may have all of your activity within your academy trust itself. It doesn't change the fact that if you turn over more than £85,000 a year of taxable activity, taxable business activity, such as lettings, then you must register for VAT. This comes with the added complication of putting you in a potentially exempt situation. If you don't have turnover of taxable activity over 85,000 as a school, you are able to claim back your input VAT under Section 126. This is a claim that you have to do online, but in a slightly different way. There's no portal. It's not done through Making Tax Digital. You have to submit a spreadsheet, essentially, of all of the invoices that you're claiming your VAT back on. Under Section 126, you can claim back all the VAT on supplies and services related to educational or the non-business activity. That's not to say that you don't have any other business activity. You may have some lettings, but these are so small that it doesn't require you to register for VAT. You will have your unique reference number and you'll have a login for the government gateway, but you won't have a VAT registration number. This means that you can't charge VAT on any lettings, for example, but it also means that if you have costs associated directly with those lettings, you shouldn't be claiming back the VAT on those supplies. All you need to do is make sure you record them properly at the point of entry. So, for example, you may set up a department within your chart of accounts structure and say anything that goes through lettings shouldn't be reclaimed. There's probably going to be few and far between, so you should do these on a case-by-case basis. So under Section 126, your requirements are quite simple. You have to make sure that you've retained copies of all of your invoices against which you wish to claim back your VAT, that you've correctly allocated them as being related to educational activity, and then using your finance system, you should be relatively easily able to get off the information you need to submit a claim to HMRC using the Section 126 online claims portal. Generally speaking, this is a straightforward and simple thing to do from your finance system, and most of you should be familiar with how to get that information from whichever system you're working with. Sometimes, however, getting all of that information on the same report can be a little bit troublesome because you need to include the supplier's name, the date of the supply, and a brief description of what it was for, which usually relies on people putting a good description into your system in the first place. Partial exemption, on the other hand, is slightly more complicated. In a normal business, most businesses are normal, standard rated. They make supplies on which they charge 20%, and they buy things, they buy goods, they buy services upon which they are charged VAT, and they add up all the VAT on their sales, they take off all the VAT that they've spent on their expenditure, and they net the two off and they pay the surplus over to HMRC on either a monthly or quarterly basis. Partial exemption, however, makes this a little bit more complicated. It's complicated because you have to make sure you've recorded everything correctly straight out of the box. And then you have to be able to prove that you're able to demonstrate your recoverability of your partially exempt VAT. This relies on you being able to categorise all of your income and your expenditure into the main categories. We'll start with income. Under income, most of your income will come directly from the SFA or your local authority. This comes in the form of your GAG, your capital receipts, your pupil premium, your sports premium. All of these grant type incomes are considered non-business activity. That is to say, they don't have any VAT charged on them. You don't have to account for any VAT, but those activities are considered non-business. Therefore, you can use them in your partial exemption calculation. However, there are some income streams that are still exempt activity, such as the receipts for nursery hours above and beyond those that come directly from the government, and for holiday clubs. This makes holiday clubs and nurseries a little bit of a interesting area to do your calculations for. But again, it's down to having the right system to keep the right recording at the point of entry so you can get at this information further down the line. Other types of income coming in can be things like your school dinners. Now, school dinners are considered a closely related supply. So again, you don't have to worry too much about the VAT on those. You just need to make sure that you've recorded that income correctly. School dinners given to staff, however, they're standard rated. So again, you need to be able to record those in a separate way. Then we move on to another very common sale, which is school uniform and school peripheral sales. So things like book bags, water bottles, stationery, and uniform. So the stationery and book bags and water bottles and things like that, they're all normal standard rated supplies. So if you are partially exempt, you have to charge VAT or account for VAT on the sale of those goods. If you're not, then you don't. School uniform, bit of a weird one because, as you will know, VAT only applies to children's clothes and not to adults' clothes. This limit cuts off from a VAT point of view at approximately the age of 14. That's not to say that every child under the age of 14 wears clothes under the age of 14, or every child over the age of 14 wears clothes for someone over the age of 14, because funnily enough, children come in all different shapes and sizes. You need to decide as a school how you're going to account for those two different kinds of uniform, pre and post 14. Some school shop services, some software, can be very sophisticated and maintain all of those records for you. If, however, you have a school shop that's run through a cash box or through a parent payments portal, you may need to have a discussion with HMRC about a sensible method of deciding what is and what isn't VATable. If you're a primary school, obviously this is quite straightforward because everything will be under the age of 14. Only in secondary schools or sixth forms does it become more complicated. Let's talk trading activities. If you find yourself in a position of being partially exempt, it will be because you are conducting business activity outside that of educating children. In the main, this tends to fall into the category of lettings. Letting out your sports hall, your school hall, your mugger, your swimming pool, your hockey pitches, whatever. Now, usually these kinds of lets would just be standard rated supplies. However, there's specific criteria around sports lettings, which means that they can become exempt supplies. And again, you have a business supply, you have to decide whether it is a standard rated or taxable supply or an exempt supply. And these are the bits that make your partial exemption calculation ready for your return. Under sports lettings, if you are letting them for a period of more than 10 sessions, with a break of no more than 2 weeks between any two sessions, these can usually fall into the category of an exempt let. So if you're contracting with your local badminton club, community groups, scouting, etc. for the use of your facilities where there are sports facilities available, then these will usually become an exempt supply because they are letting them for more than 10 sessions. That's not to say that you might have shorter contracts, which would then become VATable. So you can see why this can be a bit complicated, and you need to make sure you're recording it correctly at the point of entry. In addition, these activities, you need to be able to identify the supplies that relate to those activities. Sometimes these activities may generate a small profit. That's not to say that it is a profit-making venture, but it does have the potential to increase income for the academy and make use of facilities that you would otherwise not be using outside of normal hours. Making sure that you get this right at the point of entry will make doing the return so much easier further down the line. Other types of services that may fall into the category of business rather than non-business supply can form things such as consultancy for non-educational purposes such as HR or finance. These supplies should be considered a standard rate supply and recorded as such, meaning putting VAT on those invoices before you send it over to whoever the customer is. Catering supplies are considered a closely related supply unless you're doing it for somebody outside of the school environment. If you're selling school dinners from your kitchen to another school, then that is considered a closely related supply and no VAT is chargeable. However, if you're renting out your school hall for events or some sort of networking and you provide catering, those supplies would be VATable at a standard rate. I hope I'm starting to get across exactly how many different types of supplies you may have going on in your school. You have to consider all of your strands of income as you go through the list. You need to assign a VAT treatment for each of these kinds of income. Sometimes your system might not be up to it, but you need to make sure that you're recording that at the point of entry so you can get your partial exemption calculation correct and not be at risk of non-compliance. Nobody wants to be out of compliance with HMRC. So when you've gone through all of your list of income and you've started to identify what is what is where, you are making the decision whether things are business, as in potentially profit generating, not to do with the everyday business of running our school, or non-business, being the business of educating our kids. Those closely related supplies will fall into that non-business category, and that non-business category will form the biggest chunk of your income. This business category falls into the two categories of taxable or non-taxable. And the non-taxable exempt part is the bit that causes the issue for partial exemption. So once you've set out all of your income streams and determine whether they are business or non-business, taxable or exempt, then if you're recording all of this at the point of entry, you should be in a position to do your partial exemption calculation without too much difficulty. Partial exemption is done through MTD. Most software should be compliant with that these days, including all the products from Sage. They should give you the ability to produce your VAT reports so that you can perform your partial exemption calculation. Let's talk income. You do need to go through and categorise all of the income streams, as I mentioned earlier. We'll start with the biggest, being your non-business income. That's anything that relates to the education of the children. That also includes your catering for the children, not the staff, remember, and anything to do with transport, trips, or anything else where it's directly related to the curriculum and the education. This includes music lesson contributions to materials for a project. All of this is considered non-business activity. You should make sure that your finance system has a way of collecting non-business activity rather than just considering it as an exempt activity. You need to show this activity as turnover in your VAT recording. In terms of business activity, this covers anything that doesn't fall into that category. First one I'll mention is donations. Donations are outside the scope of VAT. So that would also include donations from your PTA or any other local body or any person or any other charity giving money directly to your school. These are out of scope. They don't have any impact on your partial exemption calculation and shouldn't be included as outputs on your VAT return. The next type of business activity is things such as nursery top-up fees and holiday clubs. You might think they're closely associated with education, and I suppose they really are. In addition, they're mixed in their form of funding, in as much as you get some of it in the form of grant funding, either as free child nursery place funding from your local authority or from half grant for holiday clubs. However, the income received from parents or guardians or potentially from their employers is considered a top-up and is therefore an exempt business activity. You need to make sure that you're recording these two different income streams correctly so that you can calculate your partial exemption correctly. Other types of exempt activity would be for things like lettings of property that isn't to do with sports, or, as I mentioned earlier, where you have sports sessions booked for more than 10 sessions with no more than 2 weeks in between them. Then we move on to standard rated supplies. These might be things that you might only have occasionally and might completely slip your mind, such as the photography commission you get from having your school photos taken, anything to do with corporate events, anything to do with catering to any events that aren't to do with another school. That's not to say that catering is all a standard rated supply. If you are providing school dinners to other schools, they consider as non-business. So, we now should have categorised all of our income. It wasn't an exhaustive list. Please do go through all of your income streams yourself and make those decisions based on the guidance available from HMRC or in discussions with your auditors. Once you've made those categorisations, you need to make sure that they're being recorded correctly. So we've collected all of our income for the period, be it a quarter, be it a month, and we've categorised it all into, firstly, non-business or business activity, non-business being the vast majority of your income, possibly upwards of 90%. And then you have your business activity, which is where you need to make sure that it is really well recorded. That business activity will form taxable or non-taxable. And then there's your out of scope activity. Don't forget what I said about donations. So we've now got all of our income categorised into these different pots. This is the first bit we need for our partial exemption calculation. Some of you may have studied partial exemption back in the day, can't remember any of it. There's a standard method. It's really not too complicated when you go through it in detail. And as long as you've got all of your income and your expenditure categorised appropriately and you've got all the data available to you, it really is quite a simple calculation to do. Once you've done the calculation, you're not sending it anywhere. You're simply doing the calculation to ensure that you are not claiming back more VAT than you're allowed to. You must retain these records for 6 years plus your current year, same as you would for any other tax records, in case you ever have a VAT inspection. Being a school means that you're probably going to be in a net reclaim position. This usually means that you are more likely to have a VAT inspection. Having been through a few in my time, having these records easily accessible, demonstrating that you have done everything within your power to make sure that you've got it right, will make this process as easy and simple as possible. It's not at all terrifying, I promise. We've done our partial exemption calculation each month or each quarter, and then each year you have to do an annual adjustment as well. I'll talk about that a little bit more when I talk about the partial exemption calculation in detail. But first of all, we need to move on to the type of inputs we can claim back our VAT on. Input VAT, it's a little bit more simple. You just need to make sure that anything related to any exempt activity you're doing, if it's purely exempt, which I've found to be very rare, then you would exclude any VAT related to those supplies. However, now that there is grant funding available for holiday clubs, that means that not even holiday clubs are an entirely exempt supply anymore. So you find that even holiday clubs are partially exempt. So you need to be in a position to work out what percentage of your VAT on your inputs relates to these exempt supplies versus your taxable supplies. All that means is that you need to be able to identify inputs related to those exempt activities or partially exempt activities. This can be achieved in many ways using your finance system. Within Intacct, we have 6 levels of dimensionality, and we would look at the departmental categorisation for holiday club or nursery fees in order to be able to identify expenditure related to those activities. Making sure that your input VAT is properly recorded is the responsibility of your purchase ledger team or your purchase ledger software. It's relatively straightforward to get this right first time because the invoice should have all the details you need on it. So as long as you are categorising it to the correct department, for example, so you can identify your holiday clubs or your nursery or your lettings activity, and you're using the VAT information on the invoice as provided to you by your supplier, you should be able to categorise all of your input VAT correctly. When you have all of this information ready, you can then start thinking about your partial exemption calculation. As I said, there is a standard method which I have found to be perfectly adequate in most cases. That's not to say that this covers everything. And if you find yourself in a situation which is slightly more complicated or the standard method does not seem to work for you, please can get some appropriate tax advice, probably through your auditors or your accountancy firm. So we've categorised all of our inputs and we now have our input VAT in similar bundles to that of our output VAT. Most of it will be related to our education activity. So we can take the total of that and say, right, that is all recoverable because that relates wholly to our education activity, to our non-business activity. Any input VAT where you can't say that it is definitely down to education falls into the potentially irrecoverable box. That remaining box you then allocate between business and non-business. So already you've reduced that non-recoverable, potentially non-recoverable bit down by possibly up to 90%. You will then take any VAT that you can directly attribute to an exempt activity or a taxable activity, and anything left over at the end, you will apply the percentages based on those different pots to say which is irrecoverable. What often happens is you find that this amount comes down to below what is known as the de minimis limit. The de minimis limit currently sits at £625 a month. So by the time you've apportioned your input VAT to your business activity or your non-business activity, you've then excluded anything that is attributable to only exempt activities, and then you've done the calculation to apportion the remaining residual VAT between business, non-business, taxable and non-taxable. You may find that the amount left that isn't directly attributable is so small that the HMRC will let you claim it back anyway. You might feel that I've done all this work to create this calculation and in the end it doesn't affect my VAT at all. That's just the way it is. We're unpaid tax collectors for HMRC. We just have to do the calculation. So we've done this calculation every month, and every year we need to do what's called an annual adjustment. Quite simply, it means taking all of your activity for the whole of the fiscal year and doing the calculation all over again. In most instances, you'll find that this has no impact whatsoever and it won't change the VAT that you could or couldn't reclaim. But again, it's a calculation that you need to produce, and chances are your auditors will ask to see it when they do your year-end audit. So here we have a worked example with some basic made-up numbers. We've categorised all of our outputs into non-business and business, and within business, between taxable and exempt. You can see this figure here is by far and away the biggest figure. That's where all the grant income is. Remember what I said about donations? They don't need to be here anywhere because they're out of scope. We then do this calculation at the bottom, which you can see comes out wildly in favour of non-business activity. In fact, only 1.26% of this period's return relates to business activity rather than non-business activity. And then of that activity, £12,000, we'll say that's lettings, makes up for 81.191%, and the remainder being bits and pieces at 18.09%. So that's the first bit about making sure all of your outputs are correctly categorised so that you can put them in one of these three columns to do this calculation here. Then we come over the inputs. Again, we've used our system to categorise them, giving us the total input figure and the input VAT associated with those items. And we see that these are the figures that we'll end up putting on our VAT return. However, we then need to do a little bit of further analysis where we pull out anything that is directly attributable to other activities that aren't business activities. So we're going to say our nursery, some nursery expenditure, some holiday club expenditure, some utilities, potentially where there are lettings you might want to include. All of these things you'll need to agree with HMRC with reference to all of the guidance available of how this works for you. I've also included a little something here about parent pay and MCAS fees. It's one to remember. If you are VAT registered, there will be fees on the incoming processing charges that you need to account for. And then here we have some VAT relating to specifically to exempt lettings, or specifically to lettings. So this is literally the PE calculation. Doesn't look very complicated, and honestly it isn't. We have the directly taxable or non-business. So you can see that is the total input VAT less the bits that we've said we're not entirely related to taxable or non-business activity. Attributable to non-business activity, we take this residual amount of VAT and we apply it to the percentages we worked out earlier from the income. So 98.74% of this is deemed to be a non-business, because we have no way of attributing these between the two different types, because there will be mixed supplies in each of these areas. And then lastly, we have attributable to taxable, where we take this non-allocatable residual VAT and assign it to the taxable portion, leaving us with a remainder of £63, which in theory we don't get to reclaim, which is the total of this residual VAT, less the bits that we've said are attributable to either taxable activity or non-business activity. As you can see, this is below the £675 month de minimis limit, so we can just reclaim it anyway. So we use these figures here. If you're in a position where you can say without doubt that all of my lettings are exempt, what you would do is you would exclude this figure entirely. If you were in a position where all of your catering activity, for example, didn't relate to students, it related to staff or corporate, you would exclude that. But these are things that you would have to decide, and building a spreadsheet template like this, either within your system, if you have the reporting functionality available, or offline, should be relatively achievable. You can then use the data as provided by your system to populate this template. If you do this and you do it consistently through the year, doing your annual review each year will be very simple indeed. So I've been referring to the standard method. This is available in partial exemption VAT notice 706. There's plenty of worked examples that you can go through. And when you break it down, if you think of it in the terms of these boxes of business, non-business, taxable and non-taxable, and don't forget you're out of scope, then really it's just a matter of applying some percentages and whittling your way down to prove how much of your input VAT you can reclaim. So you've done your partial exemption calculation, you've done your annual adjustment. One thing I would mention is that there are special methods, but if you wish to move to a special method, you should seek tax advice from appropriate people. This should come through your accountant, and you will need to contact HMRC directly. I'm not in a position to advise on any of those matters because they will be on a case-by-case basis. One thing you should think about if you're looking to invest in a significant capital project which may fall into the capital goods scheme, then that has the potential to impact your partial exemption calculation, and again should be discussed with appropriate tax advisors before making the financial commitment. A lot of what I've talked about has been about categorising your VAT correctly. Making sure that your system is up to the job is another matter entirely. Most finance systems are set up for business. There's not a huge amount of businesses that are partially exempt in the way that the academies can be. And as such, they don't necessarily have all of the VAT categorisations that you may need. A standard system wouldn't, for example, understand that you need to categorise your non-business activity. This is something that simply does not exist outside of the charities sector. You need to make sure that your finance software is up to capturing all of this information so that you have the data available to do your partial exemption calculation. It's not very often that a finance system will be able to do that calculation for you unless you're working in a very standard way. So it's more about making sure that you have the data available to make those calculations, submit your VAT return compliantly, and have all of that backup documentation there for you should you get an inspection. In Intacct, the system that we at Solutions here market to multi-academy trusts and single academy trusts alike, it has 6 levels of dimensionality just within its core chart of accounts. In addition to that, sales and purchases can be split down to a very low level by what is known as items. Now, whichever system you are in, you need to make sure that you have adequate categorization of your inputs and your outputs into business and non-business activity. A lot of systems designed for business rather than for the education sector will have no comprehension of this idea of non-business or business activity because it simply doesn't exist outside the education and charities sector. Within Intacct, this is achieved between the order entry module and the purchasing module, where purchases and sales are categorised by items. This makes the categorisation of all income super easy by giving it an item number. So grants, for example, is an item that it is non-business, but it is not an exempt activity. Some systems have assumed that because grants are exempt, they form exempt from VAT, which means they don't necessarily turn up in the correct boxes on your system. If you've had issues with this in the past with your current finance system and are looking to move, then that's something you really should consider. How easy will it be to do my partial exemption reporting? Intacct offers all of that very simply with the data available to extract very easily, so you can do your calculation, submit your return, and never have to worry about whether you're getting it right or wrong. Each time you have a new kind of income stream, it's worth checking in on the HMRC website and seeing which category does this fall into. Is it a closely related educational supply or isn't it? If it's closely related, then it will be non-business. If it's not, then chances are it's a business activity and you need to be very careful as to whether it's exempt, standard rated, or out of scope entirely. I hope I've covered just about everything that you'll need in terms of putting together a partial exemption calculation. Like I say, there's plenty of examples on the HMRC website and various notices applying to it. There is in fact just so many that it makes it more complicated than you think it would need to be. So I'm hoping that what I've discussed today gives you some guidance and points you in the right direction. As it currently stands in the independent sector, education is an exempt supply, making private schools exempt businesses. They may have a trading company within their group of companies, which may be VAT registered in a normal, standard business kind of way. There's been a lot of news about Labour's plans, should they be elected at the next election, to change the status of private schools to try and remove this exemption. Initially, it was to remove charitable status. However, it seems now that the current thinking is that instead they would change the status of the supply, meaning that independent education would be a standard rated supply, rather than an exempt one. This would mean that private schools would be faced with the possibility of taking a 20% drop in income or increasing their charges by 20% and passing that on to parents. The impacts of that on parents prepared to pay that is as yet unknown. But all of these things are being considered by private schools and their accountancy firms up and down the country. Potentially, this means that independent schools will find themselves in a standard rated VAT or a potential exempt VAT situation. This switchover will mean reconfiguring your finance systems from the position that you're currently in order to be able to retain all of the information that you require, to account for VAT correctly, to apply it to the invoices that you need to, and then to make sure that you're recording all of the inputs correctly such that you can do a VAT return. Is your system up to that? Intacct, that we are selling into independent schools quite successfully at the moment, has the ability to switch this capability at the point at which the government decide that they're going to make the change. Labour have committed to doing this within a year of coming into Parliament, should they win. These are things that are worrying private schools at the moment. And I would like to reassure you that should you have a product from us, then we'll be here to assist you in that transition and advise how best to get the best from your system to make sure that you're compliant with any new changes to the VAT legislation. You may find yourself in a position where you are partially exempt, like some of the multi-academy trusts are. And again, you need to make sure that you've got the system in place to record all this information so that you can do all the calculations correctly and keep yourself in compliance. I've talked about a lot of things today. VAT in education is quite a complicated matter, but I hope what I've said has helped to point you in the right direction and given you confidence to go and seek guidance where necessary. There's lots of information available on HMRC's website, and sometimes it might just be worth persevering with the telephone system and getting through to a person. They can usually advise, for example, if you've got a new income stream and you really don't know what it is, then if you get through to the right person, they should be able to help you. I'm hoping that what I've said today has started to demystify it for you and given you a little more confidence in dealing with these matters. I've also hoped that I've given you some food for thought in terms of your system as to whether it's up to it or whether you should potentially look at a new one. If you do wish to look at a new one, we'd love to speak to you. I can definitely help with making sure that our system works in a way that makes it easy for you to remain compliant. So what we've covered today is, how did we get here? Well, we got here because it turns out that not letting SATs and MATs reclaim their VAT put them at a disadvantage to local authorities. So they sorted that bit out. We've talked about Section 126, which is where you don't really have any trading activity outside of your education, which just means you can claim back your VAT. But it means that you're not a registered VAT company, which confuses some suppliers, but it is the way it works. Those claims are done through a portal rather than through MTD. I spent most of my time talking about partial exemption, which will only apply where you have trading activity that compels you to register. That limit is currently 85,000, so if that doesn't apply to you at the moment, just keep it in the back of your mind in case it does in the future. I've talked about the system and how you need to make sure that you're recording everything correctly at the point of entry. And I've made mention of the fact that there's potentially some huge changes coming to the independent sector in terms of VAT, and advising that you should perhaps look now to think about whether your system is up to these changes. I hope you found what I've said helpful, and I look forward to speaking to you.